Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 5 o'clock in New York. It is Tuesday, 24th day of December 2019, and this is the Daily Report for Gold and Silver, a special Christmas Eve edition. We did see a major move in the market today, and although the markets were shortened, trading only a half a day, nonetheless, we saw double-digit gains. Now, when we think about most analysts citing the fact that there was pent-up demand, and that was the primary reason we saw gold rise over the last couple of days. My sense, a lot of it, especially today, has to do with the threat from North Korea that they will do something on Christmas. Trump came out today and said that if they do, he is ready and prepared for a response. So my sense is that if nothing happens, we will see the market kind of back off on Thursday, and if the North Koreans do something nefarious, we will see a big jump. In either case, what we did witness was a break above the 100-day moving average, as well as above our compression triangle. And those were the two things that we were looking at to really indicate whether or not we would enter the market from the long side. Let's take a look at our current pricing, and then we'll go ahead and take a look at our charts. Although we had a shortened day in trading today, even during that small period of time, we saw gold rise $15.70 over 1,500, first time in 7 weeks, 1504.40, and that's a gain of well over a full percent. Platinum gained about 0.75% today, closed up $7.20 at 945.60. Palladium basically unchanged, 1849.10, and silver gained about 2% on the day, 35 cents at 17.85. And the dollar was stronger, but very, very weakly stronger. On today's report, I do want to talk about our strategy going forward because it did meet criteria in terms of gold, breaking above the 100-day moving average and breaking above the pennant formation that we identified at the beginning of the week, at the end of last week. Let's take a look at our charts. So traders, we are looking at a chart that we put together about a week ago, and it talks about the fact that what we could identify was a bull flag which converted into a bull pennant formation, and we talked about really the necessary criteria for us to enter the market because we wanted to see a breakout. We certainly saw that occur today. When we take a look at this particular pattern, first, this long wave 3 is what we're identifying as the pole, and the difference between a bull flag and a pennant is a flag is basically two parallel lines forming kind of a flag formation, and then when you look at a pennant is what I label as a compression triangle. We can certainly see that, and what we do is we simply go from the series of highs in the market, and we have had a series of lower highs, and we have had higher lows, and that's what caused this compression triangle to form. Now, yesterday, we definitely got a breakout. We traded above the 50-day average, but below the 100-day average. We talked about the various levels, and then, of course, 1497 being the 23% retracement level. Now, what we saw today was an utter breakout above all of that. Let me go ahead and blow this up a little bit. And as you can see, today's candle most certainly broke above all of those levels. Now, my sense is right now is that we got the indication that we wanted to see. However, tomorrow is Christmas. The market is closed. Although the majority of analysts said that this was simply due to buying as a hedge fund, an increase in demand, I also believe that this was kind of a hedge in case North Korea does do something over Christmas, as he has kind of threatened to do. Trump came out today and said that he's well prepared to deal with anything that happens, and my sense is that if nothing occurs on Christmas, most likely we will see the market pull back a little bit. Now, if something does happen, we could see this market take off furiously. But nonetheless, as long as we're staying in this area, and even if we pull back, but we're still above, say, 1497, we will enter a long position. So my recommendation is we are currently flat in the market. We will look to put a position on after Christmas. That would be Thursday, and I will send out the appropriate trade alerts to that effect. And as I've been talking about, We will premiere our 2020 outlook between Christmas and New Year's, so that will go out later in the week or beginning of next. But what we really want to focus on is the big picture, and the big picture uses this monthly chart. When we look at it, we're looking at a tremendously long wave 3. This, of course, is what I'm calling a super cycle because it starts really in 2001 and this wave culminates in the middle of 2011. So it's about a 10-year move. Then we had this dynamic sell-off, this multi-year correction, and that really took us from 2011 all the way up to the end of 2015, the beginning of 2016, and that's when we had the super cycle 4 begin. It's a little bit different, obviously, than when we're looking at our daily charts. As you can see, today's move broke above the 50% retracement, and that is significant because it says it in terms of major resistance. We've talked about minor, but major resistance, that doesn't really occur till about 1590, now that we're above 1500. So as I said, depending on what happens on Christmas, if North Korea actually does something that causes a geopolitical hotspot to heat up, so to speak, then we're going to really see it take off. If it does not, I expect it to pull back a little bit, which will give us an excellent place to enter the market. In terms of what I am looking at, in terms of the conclusion of this super cycle, I think we could see this market go to about $2,100. But traders, I'm not looking for that to occur in a single year. That would be, of course, a multi-year move. And when we realize that we've already seen, say, from 2016 to 2020, because we're just finishing up 2019 now, that means we've seen 6 years. So that would be over the next, say, 3 to 4 years to see it go up over $2,000 per ounce. I want to wish all of our subscribers a Merry Christmas for those who follow it. Happy holidays to everybody, and we will wish you a gracious and blessed New Year, of course, as we get back on the air following Christmas. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Thursday for the next daily update and review. Bye-bye.